Hello guys, and welcome to a new deep value video. Today we're going to deep dive into the financials of American Express, ticker symbol AXP. American Express is a multinational financial services company. As of the 14th of September 2024, its stock price stands at $255 and it has a market cap of 180 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 19.9, while its price to cash flow ratio is 7.2. Taking a closer look at the company's growth rate over the past 5 years, we can see that its revenue has grown by 64.8%, while its bottom line has increased by 23.9%. In terms of earnings per share, there has been a growth of 40.3%. However, it's also important to note the change in the number of common shares outstanding, which stands at 720 million, reflecting a minus 12.7% change. Additionally, the interest coverage ratio is not calculable in this scenario. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 1.65. This ratio helps us understand the company's short-term liquidity position. The long-term equity ratio is 0, and the overall debt equity ratio is 1.75. Now let's transition to the cash flow statement. Cash from operations is 18.6 billion, reflecting a change over the past 5 years of 36.1%. Meanwhile, cash from investing activities is minus 24.4 billion, showing a change of 46.2%. Furthermore, cash from financing activities is 18.3 billion, showing a change of minus 3,641% over the same period. And lastly, free cash flow has grown by 41.7% during the same time from 12 billion to 17 billion and is projected to grow to 25.5 billion in fiscal year 2025. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The return on equity is 45%, the return on investment is 16.3%, and the return on assets is 3.7%. The return on invested capital is not applicable, so we'll just put it at 0. Finally, let's find the acceptable buy price. The first method is conducting a DCF analysis, a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 6.5% for 10 years, and a perpetuity growth rate of 1.5%, we get a fair value of $359. Secondly, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times trailing 12 months free cash flow, we get a fair value of $590. And thirdly, the analyst price target is $264. Putting it all together, we get an intrinsic value of $404.7. And using a 15% margin of safety, we get an acceptable buy price of $344, suggesting that the stock at the current levels is undervalued. To wrap up my analysis, I rate American Express as a buy. Although personally I own the stock, so I would urge you to do your own due diligence first. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.